Okay, Sunday, November 13, 2016. We're going to look at spot commodity futures. Okay, starting off with oil. Okay, basically coming off a double top up in here. 50-50 was the short. Basically, the 43 level was a minor support level. I believe that oil is just in a larger sideways pattern, dead money, just like it was in the 80s and 90s. And that's kind of how I look at it. I would use the cloud as resistance. These are daily charts, okay? I would have to say, though, that give it a couple of weeks here, I think that oil is going to trade lower here. The unbalanced volume, we haven't had a washout. You know, the yellow lines mark, horizontal lines mark, basically kind of turning points with the unbalanced volume. We had a lot of bodies up in here. We've taken out about half of them, so we need more to the downside. It's how I'd look at it to find an opportunity to go long. So for right now, I think that the upper end on oil is probably 45, 46, and then on the downside here, we're going to S2 is 40, 28. So I think oil is going to trade lower here. What I would do personally is, since we're down here, I'm going to guess it's going to be a sideways range, so play some sort of oscillator type indicator. The ADX here, okay, the blue line says it's for if you're in a trend environment, it'll increase higher. So basically the trend is down on oil on this indicator, okay? So any mounts I'd like to see on the short side of oil heading down to around 39. Okay, but me personally, I'd probably stand aside. I'd go and look at natural gas if I wanted to buy on weakness. Brent oil's trading below it, so oil is oil per se. So Brent also led lower on the two of these here, right? Yeah, U.S. West Texas broke out, but Brent was weaker, and Brent's leading below here again too. So these lines here, okay, so Brent 40 again also, but this is interesting down here, 34. We have any other lines here about 37. Okay, so it'd be $3 range here, 40, 37, 34. So how to play Brent on the downside here. Any resistance would be the cloud. But I think a lot of marking time, if you look at this as a larger sideways pattern. So it's $3 lower here, $3 lower, $3 lower for oil. Gold prices, okay, talked about gold loses 1250, then the next target is 681. I won't go into how I came up with 681. It's in previous videos, going back as a point and figure chart. I just picked a bell area, point of control area that came around 681. I also wanted to post that number to see what kind of crap I take. That's my look. I take a lot of crap, but that's what I've learned is that those are tells. It's like a poker, I say, hey, what liar's poker. Hey, I have, my two twos are going to beat your two aces, and then I take the crap, and then the flop comes out, and I have, 3 or 4 deuces, and I'm a winner. That's how I play poker. If I have a pair of deuces, to me, they're just as good as a pair of aces, because even if you have a pair of aces, it still doesn't say you're a winner, right? Oh, look, 559. Some guy has, 2 5s, or in my case, two deuces. That's how I look at it. The odds aren't there, but a pair is a pair in my eyes. So here was, I mentioned on Friday about gold going below 1250. Okay, the thing here is the volatility. We've seen massive swings. This is on a daily basis, so this is a good move up in gold. Okay, after they came out after the run up. Okay, unbalanced volume on here were highs. They gave it one last shot. This was up into this area. We talked about it. This does not show overnight because this is a spot. So we did trade up. We traded up higher, and we've come down. It'll be in the futures charts in the next video. My concern is that we bounce up somewhere back to 1240, 1250 for any reason. Okay, just due to the fact that one, here's unbalanced volume on the daily. It's at a range when it's been oversold before. Okay, so it's just for bounce. If you draw a trend line up and a trend line down, we're in the down stages. So that's how I'm looking at gold. All the talk in the world about people lining up in Britain and in China and Russia and blah, 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 that's fine. And with all that, gold continues to go lower. Gold's going to have pressure multiple ways. You have the price and also the carrying costs for buying commodities. You have to store these things, even on paper. Okay, so right now, any bounce in gold. Okay, so that when I talk about tighten stops and stuff, you know, you break out on, you know, it breaks out, you know, a new day. Okay, so you have, well, I guess it did show it up here. Oh, it did. Okay, 1338. Oh, cool, rock and roll ski. Did not see that there. Glasses, Kevin, glasses. All right, hit the top of the cloud. How nice was that? Okay, came back down. All right, I'll have to remember that. I did not know that because it says end of day on there. Okay, so so the huge dragonfly kind of thing or whatever. All right, so it takes out the and makes a new low. You'd move your stop to here. It takes out the low on here. You'd short and then move your stop to here. This would be the target area for your stop, right? 1260. So, you know, we're talking, you know, 30, 40, you know, you could have that kind of short cover and rally. When oil fell from 147 to 36, it had one day where it was up $25. So that's what I'm telling you. You might have a winner here. You might have it all the way up to here, but you have to be very careful. This is high, I'm going to say, is in here, but gold should have a precipitous decline. This pattern reminds me of the Japanese yen falling from 122 to, it went under 100, but we'll say 104. Okay, so, you know, once these things start running, you close your eyes and you just get on board. The best is probably going to be the options for a lot of you, you know, however you want to do it. But I'm a big fan of selling on strength in the gold department here. I'm aiming for the 600 now and not the 1400. Okay. Natural gas. Okay. Mild winter and a target down here. I'm just shooting at the lower range where I'm looking to add new longs and stuff. You can tell that we've lost about 50%. So anything mild winter, we're still kicking the 80s here. We do get to 69 on Thursday. Just means I don't have to run the air conditioner. That's right. I'm not today, but I'm ran the air conditioner yesterday. At best, you could have a shoulder ahead and another shoulder, so the bulls could get back up to 290 on here, say on Thursday after EIA. That would be a fun one. If we slide on natural gas, okay, and we come into EIA on any weakness, I would be a buyer because we've had a precipitous decline. You finally wash out the people on the unbalanced volume on here on this daily chart. So we'll look again at it on Wednesday, but I would be aiming on the downside here. We'll say 220, 230, 240 is another number with memory. You know, try and do it in the thirds. Here's a section. Well, you can see the bars over here. This is the volume. Okay, this is I call them points of control, things of that nature. The happy place. A lot of trading's going on here. You know, you get below it, all of a sudden the next area where there was interest was down in this area. You can see a lot of 220s in here, and then the $1.80s. Okay, that'd be any type of washout. You know, the winter doesn't develop in the spring. You know, I'd be looking to come into this area, and the third leg would be to double bottom down in here. So even though winter's coming, it doesn't mean it's going to, you know, you could be going to a football game in short sleeves and shorts, that kind of thing. I haven't checked the weather, just mine. Yeah. Actually, I start off with what month is it, because the pine needle or the cactus needles don't fall off. But on the upper end, I'd use the cloud area. Here's some resistance for next year and supports for next year. But you know, how I'd buy it is try to buy it in this area, maybe with options, and then we're so close enough that you could try back to 160 if the winter doesn't develop. Okay, and netty gas. I am bullish overall in natural gas, but they're going to give me Mother Nature's going to give me an opportunity with a mild winter. I have to look forward because I'm running out of time, just due to cycles that we're going to have a hard winter in the next, we'll say 3 years, and a drought in the next 3 years. You know, corn. Okay, so I have the next drought written on here to try and reiterate that this high is going to be in for a while. This does look like somewhat of just a bounce off of reaction off of here, and then head lower. Okay, at best for the bulls is that this is a harvest low for now, and we trade sideways into winter and late winter and then early spring and see how things work out here. But that's stretching it for the bulls, because we know, 340, all of a sudden we talked to 320 and then 280, and we're doing that game again. Canadian dollar, you can see that it's sliding and continues to slide. I was looking for some sort of bounce down here last week. We got somewhat of it in oil. We got one day from 44 to 46 and change, I believe, and then it rolled back over. So the Canadian dollar here does look like it wants to move a little bit lower, but where's that oil again? Yeah, we're about halfway, so I guess it's 45 and change, 43 to 45 in one day. That was the one day. Sent out the signal, got to the top of the cloud, but rolled back down. Okay, so oil looks lower, which means the Canadian dollar is going to come down. All right, but you remember, it's also, we have the US dollar too, if there's some pullback in the dollar. But the Canadian does look like we're walking into a washout area down here. Copper was a screamer here. Looking back on the daily, coup d'etat, no, what? Yeah, not coup d'etat. Yeah, you know what I'm saying. Okay, so this was so this is your coil, right? Okay. One person I sent this out to. Unnamed person was long JCC, and I sent him an email here that there's a bounce, and I also wrote that I thought that it would be more than I thought, but being an analyst and not an active manager, I didn't take it. Because my interest here, we're looking at this here, is I'd be looking at that copper coming back below here. You know how we had the run in gold and silver? Same type of deal here with copper. So here's an opportunity for me. I didn't take this one, even though I quote unquote called it. I didn't, but now I'd be interested in the short side down to here to like 195. You know how you go from, here's R1, well, the same type of deal, maybe you go to S2. It doesn't say that it's not going to go higher, but this is a pretty ugly bar here. And you had your unbalanced volume spike up. So I'd pass. It's tough to, you have copper running, but then you don't have the other metals running, Gasoline, it's coming down. Unbalanced volume is beginning to reach an area where we found support. I'd have to say somewhere in this area. There are contract change in the gap here. I'd lean that way. This was the explosion. So this high is going to be in here for a while. We're cleaning them out. We moved them in, and now we're moving them out. Soybeans, talked about this before, not on this one. We looked at money flow. Money flow is the yellow guy. So we had a high spike money flow at 1031 area. That would go back to those videos a few weeks back. We talked about trying to get up here at 1040 for a short. Some of you I know got this here, but I just think it's going to continue lower. Now remember that grains, wheat, corn, soybeans and stuff, they move $50 a penny, just like $50 on ES. So if you like, here's a 12-cent move. So if you like a 12-point move in ES, it's the same thing. They're pretty liquid. Others on a daily, here's 200,000 contracts. They do have minis. Yeah, they have mini contracts, micros. I think it's 1,000 bushels. Okay, so 1/5 of this reminds me of the old Mid-America exchange days. Okay, there is a cloud here of some, I'll say, support type deal. You also have harvest deal. If it rains somewhere, you get talk of it. So it's just one of those things. This is, be very careful. But they do move. I mean, look at this. It swings up and comes back. Swings, basic, almost outside type of pattern. Full reversal. So there's some good trade going on here in beans. But we saw with the money flow, and now that's kind of going the other way. This is kind of a stretch to be a bull flag to go higher. But like I talked about before about bullying the markets, there's a lot of wicks up here, so I wouldn't think they would go higher. But whatever reason, something. It's kind of like you hear about world wars. It's the worst winter ever. The timing is just impeccable in some of this stuff. So same thing here. The weather comes in and the stuff is left in the fields per se. I don't know how much of it is done. I assume all of this is priced in. Your Cargills, your ADMs, your hedge funds, and all these guys. I haven't looked at the commitment of traders yet either. But my only on shorting on here would be this cloud. It need to come through this cloud here. But losing 950, then I assume it's going to be like 850 and eventually 650 in beans. So if you're a producer, hedge. On the flip side here, use these other lines. This is pivot, so we're below pivot. So in theory, you stay short. But these would be targets on the upside if there's some sort of harvest issues, grain strikes, yada, 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 whatever. Okay. So this one also, you can use a little bit wider stops here. I'd probably use 6 cents, which is $300. So compared to 4, because it's kind of sloppy on the beans here. Heating oil, it still has more room to come out on the unbalanced volume, so it can slide. But it's the heating oil. It's kind of like the natural gas. If any weather-related, 1 day, 2 day, 3 day off event, that's what I'm going to call it. But I'll say at best for the bulls, it's just a longer sideways pattern into the heating. But I think it's going to slide further here. All right. All right. Here's silver, big fat bar. If I'm reading this right, the day on balance volume, they're still holding on. Okay, so that means there's more room to run on here. Industrial metal, silver, not as much as with copper. It's a byproduct. You don't throw, when you're mining for copper, you're gonna find other stuff too, and you're not gonna throw it away. So you're having one where you want copper and your byproduct is silver and that kind of deal. And so you have the decline. For me, I'm looking at this as for a period of a large sideways pattern. We talked about that last week when we looked at the monthly charts. I want a lot of these things just to go comatose for years and then just start the accumulation process. And you can also teach, like I mentioned, I was a waiter during $3 silver, and what I made at my lunch tips, I bought 10-ounce bars every day. Okay, yeah, it's one of those things that, teach somebody else, you're spending you're making enough to buy 10 ounces of silver when things are good. Wouldn't it be nice when it hits the fan that you have 10-ounce bars of silver laying around, and now you're 15 years older, so now you're in your 30s and 40s. That's, Uncle Kev told me to buy silver when it was comatose. Go for it. They're always fun to look at and to pick up and give as gifts and that kind of thing. But when you're buying 10-ounce bars for $35 and they go to 500, when you're gonna lose your job and your house and your wife and the kids and all your toys and stuff, it's nice to have that. And that's how I operate. When nobody wants it, I want it, and when they all want it, I don't want it. But here, just with the unbalanced volume again, there is lots of room, precipitous declines here. Sugar may fall victim. They're still kind of hanging on here, but it may fall victim to people when they hit the button in everything. So even though sugar is still kind of hanging in here for right now and holding the cloud, I'd use the cloud as support. The trend, like you can see, it's kind of things are kind of waning on here. Me personally, I'd just pass. Okay, for right now. Wheat's rolling into the cloud, so this may give you a taste on how beans are gonna happen here. I do like the wheat as a counter-cyclical play. If corn and wheat come down, or excuse me, corn and beans come down over the next year, and wheat doesn't fall as much, okay, then I'd be looking for the wheat deal, because corn and beans you have to wait for the July period. With wheat, you have winter wheat and spring wheat, so you have different opportunities. If this wheat here is going to go comatose for a while, I'd be interested in as volatility comes down, option prices, so you can go and buy 6 months out, and it shouldn't be too painful, compared to a contract where when you get towards bottoms and stuff, you can have an ugly bottom, just like trying to pick tops on the Mexican peso, or the copper. You can kind of go extended, that kind of thing. So wheat, I'd venture in with options or spreading. You can start off with spreading. Coffee came off. There is a level here. This is pivot for this month, November, and landed on pivot. Unbalanced volume still has room to come off of it, down to what, the $1.50 level. For right now, it may end up being in a larger sideways pattern for right now. I haven't listened for anything weather-wise related to South America and things of that nature. I did notice that my Hawaiian Island brand of Kona coffees at Safeway, and they're kicking a couple of bucks off of it, so that's kind of a good deal. It's a blend, though. I do the coffee thing. Especially when it starts getting colder. It's tough to drink a soda, or you drink enough water out in the desert. What did I drink? I remember drinking 2 gallons and not going to the loo that day. I thought I was going to die. Lots of water. All right, so coffee, somewhere in this area. It's tough to say that I want to be 100% bearish on this thing, because the trend is still, if you draw a trend line underneath, it's still hanging in there, but we may have something where this is a shoulder, this is the head, and this is another shoulder. Pretty heavy selling on these bars. Coffee can get kind of, when we talked about it on the way up here, that coffee can come down to 137 area. So watch out for a hard slide, just like you saw in gold and stuff. Be very careful. I'm not, even though, you draw your trend line underneath here, it's landed on it. It's landed on pivot. It's like, the risks, but if it does kick up further, the angle of ascent should increase sharply here. So in coffee, just like with cotton and stuff, most commodities, they have just, or copper, the behaviors just can get out of control. That's what I like about commodities, is a zero-sum game. Somebody has to lose and somebody has to win, and so all the money stays on the table. Cocoa prices, I just got done bad-mouthing Toblerone. The gap, though, is nice for the teeth, because I didn't snap it, because chocolate on your fingers, but biting into it works. I don't mind. It's a good chocolate. I do like my cocoa too. They have those little Mexican style coffee, like the Incas did with cinnamon stuff, these little black tablets. I just chuck some of it in the bottom of my glass in the morning, and da-da. And coffee's, cocoa's good for you, they tell you, with all the other things that are in there. All right, yeah, that's right, Kevin. Drink your coffee with your unsweetened cocoa, and it's just like exercising. All right, so cocoa prices, I could continue to go lower, but this type of pattern is a pause. Okay, so we may get a bounce here. You can draw the channel lines here. You can see that, the decline all of a sudden took a nasty turn for the worst here. The unbalanced volume does have something to come out, but I'm saying you probably get a bounce and then come down to 2,200 in cocoa. Platinum, same thing. We're going to get some decent unwinding. Platinum, though, already kind of cleaned them out before it got to the low, so that may be a good sign. You're going to be flipping for $10 a shot here, but it's tough to go against the grain. This was the high on the unbalanced volume, some periods of low. previously. And we're doing that here, 25,000 contracts. So it is thin, and we're talking global too. So, but these are some pretty hefty bars of unwinding. So I just think there's going to be further follow through here, shoulder, head, shoulder kind of thing, draw a line. And that would be 300 lower. So we're talking, you know, when I talk about $800 gold, we can talk about, you know, $600 platinum, that kind of thing. Gold crossing platinum. All right, cotton. All right, look at this one here set up here. This one looks like it's going to head lower. I did notice when I was driving through Fort Mojave and stuff that the cotton crop is due. So we're I'm guessing that they're going to start plowing through the cotton fields. Just drawing a trend line here. You know, your little pennant thing here, it does look like it's going to trade lower. They did try and poke out, so it hit some stops, right? And you run up this, if you were short and you were stopped out, if you were short and you were stopped out, they whipped it, came all the way back on this daily bar. So I'm going to assume then we're going to bust this, and it's a measuring. The pennant is a measuring, so you take 72 and 65. What is that? 7 cents. Right, Kev? Yeah, we'll say 7 cents. So 7 cents below this here is like 58. So the target would be down in here. So cotton would have a target of around 58 is how that works. These are called measuring patterns. So this pennant, on the flip side, it would go up to 80, okay? But with just the kind of look at it, the gut instinct just right off the bat, you know, behavior, you know, you could stay short with your stop up in here, but that adds up. I think it's $50 $500 a penny. Okay. Cotton, palladium. This is rock and roll hoochie coo. All right, this one has short written all over it here, just right off the bat, and the money flow. All right, here's your palladium. However you can get into this one, dump it. I would just save this chart. This palladium pal. Here, a pal of mine. Whoops. There you go, Kev. You found one. It's thin, 9,000 contracts, but wherever you can find it, that would be a short one. I'd look at it this way. There it is loaded, and it's thin. So if you have somebody just come in and hit it, it can run, right? Because it's an equal game. There's going to be shorts on the other side. But this one to me just looks like an opportunity here with the palladium. I don't know if they're in Teslas or what the story is, but this it is strong for an area that's weak, okay, with the precious metals. But this one looks like an opportunity here, and you're at the top of the cloud. So if you short it, there's not much of a stop on the upside here, okay. You know, you could also say that it's in a larger sideways pattern. But the palladium here, I would just by the unbalanced volume, if I was standing in the pit and I had X amount of dollars, I would whack this thing all day long and see what happens. Okay. Lumber, basically just a larger sideways pattern for right now. It is coming into the cloud, which might stop it for now and work on a sideways. Depending upon what we do with interest rates, we might have a slaughter in lumber to come down because we're going to need some adjustments in interest rates. Everybody has a payment, so the house has to get smaller, just like the boxes of macaroni and cheese and tuna cans, right? So you might have something here where you have a shoulder and a head and another shoulder, and it rolls over. We have a seasonal thing. Maybe the Canadian dollar goes the other way, whatever, but it just basically looks like a larger sideways pattern, and we might have a rollover here in lumber. Very thin, only 300 contracts. This one looks like it's going to head lower here, unless we get some sort of full reversal here on this daily and the CRB. We have some highs. Typical of agricultural, and then the harvest highs again, where they deliver the cash and buy their futures back for the hedge. But it just does look like, you know, we're going to have oil and stuff in the soybeans and corn and wheat, and copper will probably come off, and palladium, and then, you know, it just looks like we're going to head lower. We're going to do a full, what do they call that, round trip. We had our bounce, and now we're rolling over. We'll look at the weeklies on another video, probably after Monday or Tuesday here. unless there's some sort of massive change. This is long heating oil, short gasoline. Basically, I was just looking for a spread to see what's, and the heating oil is obviously it's working on just recently outperforming gasoline. How about that? I always love that one. It's an outperform. Well, you can have it outperform. That's the sector where it's the least weakest is an outperform with these guys, you know, in relation to the sector. You know, if it's oil related and Exxon and all those guys lose 20% and your stock's only down 19%, it outperformed. You know, if they say market in general, that's sneaky on their case. Let's see here, Kiwi. Okay, so we talked about the Kiwi in November going into the money show in Vegas. I remember typically being short. We'll probably have a little volatility on the open this morning because of the earthquake. Usually money is repatriated to start rebuilding and things of that nature, but it can disrupt industry and that would cause issues. They also sometimes drop interest rates to help spur growth. I don't know how much damage there is there. I'm sorry to hear that. It's unfortunate, but a lot of this is out of our control. We do the best we can, right? We're all on this planet together. We might as well, you know, work together. That kind of thing. I wouldn't mind going to New Zealand. I can learn how to build something. All right. So, but I would say that there'd be a shot down to 68, 69 on any bounce here related to the earthquake. But it does look like the Kiwi will come down with the commodities too, just like the Australian dollar. Here's the US dollar, hard runner. Okay. So obviously we know that quote unquote, it's going to be inflationary. Exactly what we needed. We needed some sort of change in psychology in interest rates, and we definitely have it. Just the amount of precipitous decline on the long bond and the run in the dollar, it just, you know, we may get a little pause or pullback here because it's on the breakout, right? And the shallower the move, the more bullish it is. Okay, this is a pretty good pullback, so this reminds me of something like they got caught and now they're running the other way, and usually you do equidistance between the two. We were looking to buy at 67 and 60 and 67. It did get into the 60s, 60. It went under 60. Excuse me, it went under 96. Try that again. We were looking for 97 and 96, and we got into there, and so now I'm looking for 103 or 100, 101 to 103 is what I'm looking for. And I'll line these up here because of the algos are going to hit these two. So the first target is a little under 100 and then 101 and a quarter. And these are the targets for next month. If the dollar should pull off for any reason, then I wouldn't take the 96 again. Then I'd go down to say like 95, 94. Okay, and then it would be a larger pattern here. Now, if the dollar came off, commodities would trade higher, but it doesn't mean that. It's not 100% correlated, okay? Just like one thinks that if stocks go down, people go hide in debt. That's true, but they may not hide in the debt that's being slaughtered, like the long end. They may go hide in T-bills or euro dollars and just kind of sit it out. You know, it's kind of like the utilities. You want to park your money in utilities while it's falling, 5% a month, what have you. So they end up with T-bills or euro dollars or money market funds, commercial paper, that kind of thing, just to hide out until they want to come back in again. Usually volatility, the managers avoid. The hedge funds and stuff, they live for this. It's going to be an interesting year. We can go back and look at who had it, who didn't. I saw it. Everyone has their research departments. Sometimes, at one time, I remember in the 90s, you start hearing that they got rid of their commodity department. They got rid of their technical analysis department. That's fine, but it's just, this is what I do. And it's like a navigator, You have the pilot that might fly from the seat of his pants and figure it out that way by just flying around and looking at names on water towers. And then you have me that'll, try and get you within a certain, you'll get close enough. But for the dollar here, I would like to see a pause. If this thing just keeps running on here, it's going to will cause havoc with stocks, I believe. Even though the foreigners, when they buy our stocks, they make it back on the currency repatriation. But remember, that's what happened with the pound. The FTSE took off, but the currency negated it and made it worse. But we are getting a nice move in the pound, aren't we now? Okay, Australian dollar, a weakness here. Looks like the ADX is turning up here, so we may have a nice run down on the Australian dollar. Like I said before, this just like the same type of pattern, even though it's a daily, looks like the same type of distribution pattern that oil had before it fell from 108 down to the 30s. So we may see a precipitous decline across the board in commodities because of that screaming dollar. This is just, take whatever commodity and divide it by the dollar, and you can see that even if it goes up, the dollar's killing it. British pound, we're getting a nice swing. Like I said, I was looking for the 30s. We got it. Just if you're in it, hold on. You here the pullback landed on the pivot. You'd actually buy in again, and then put your stops at 123. So it's a 200 pip range, but to each their own on the stops. That's where the leverage comes in. You don't have to do 200 to 1, 400 to 1. You can do 10 to 1, 20 to 1, 30 to 1, 40 to 1. What I like to do is I'd like to keep the 40 to 1 leverage, because just in case something happens, I can always take it off and add more. Like you get a one-off event, you're still protected with your stops and everything, and even if the count goes pop, because it's 50 to 1 leverage, or 40 to 1, at 50 to 1, a 1% move blows you up, right? If you lose half, they pop your account. Some of them go a little deeper. But it's all about the risk management, and especially in commodity and Forex, you have to let these things run. You have to let them run. Just if you're already in here on the fat bar in the 120 area, you let it run, but you don't feel sick, if you get stopped out, because you can always get back in, but I'm aiming here at the 130s. Well, then take a look at your spreading versus this guy here, the euro. And the euro, in my eyes here, okay, we ended up below the previous low on a weekly basis. So my targets now would probably be 106 on the euro, and 109.5, 110, we'll say, for any bounce. And now they're going to lead us like Asia and then Europe before we open up. So you may get both sides of all currencies whipping both. What's good for Europe is bad for America. And then if we go, if everybody say scrambles into the euro, because that's what they do to hide out, okay, when we come to America, we all run back into dollars because that's what we do. So you could have, I say that the sun is over 3 times over the planet, right? So the sun's over Asia, the sun's over Europe, and the sun's over North America, South America, that kind of thing. The dollar is falling, so you buy gold, right? Well, the euro is falling, so you buy gold. Well, that offsets the other one, right? So there's, as I go through these charts and stuff, I just assume that there's going to be a little more volatility here. If people think they have it right, they may get pinched. So, but I would, if for me, any bounce here in the euro, I'd have it move lower. And I usually give things till Tuesday, but I'll just give it till Monday night before we roll in. I guess I should take a look at what's going to be on the news. Here's the yen. Okay, so if the yen gets stronger, okay, the yen usually typically gets stronger with the move in our interest with our paper, because they purchase our paper. So there's a capital gain in our debt, and so it back to Japan. So Japan's had a pretty good run for this year, the yen, and now we're beginning to roll over. This is looks like it's a precipitous decline, which means the U.S. dollar yen would continue higher. And like I said, I'm still looking for 120. What are we at? 106 and change. You know, we've moved on to 102, came back up. Now I'm looking for 100. Well, you know, after the 102, after the hard move, I'd say that was that. But any weakness, you know, for right now, it looks like if you just drew a trend line up, that's, you know, now the trend line is down. And this was just a nice 45 degree, but now we're beginning to pick up this cent. So they may all run into dollars here. Why, too? Don't forget that if our interest rates are going higher, this is, what do they call it? The cleanest shirt in the dirty hamper. Same thing. They come running, we have a better rate kind of deal. Swiss franc, the daily here, failed to make a higher high. You know, we have some highs, you know, ceiling, lower, ceiling. We may get a precipitous decline, right? Also, at the Swiss franc, and also you have gold and things of that nature. The Swiss franc has been, it needs a little bit of its fluff taken out of it. Agricultural index, at best, it's a sideways move, but it does have a look that it's going to trade lower. It also includes oats and things of that nature. Commodity index in general just looks like a bear flag here, and we'll head lower. So basically a round trip is how it's all shaping up here. The targets are back to the previous lows for this year or thereabouts. Energy, this one just like it's going to stomp lower. It really does. EDX is up there too, 50. So it is beginning to be a precipitous decline. So it's one of these things that once this stuff starts, you have to click it, close your eyes, and put in your stop and cross your fingers. Okay, so here's Glencore. Okay, so here's our industrial metals. All right. So I wrote here about Glencore was stalling here before it took off. Remember, they lost billions and had issues with cotton. They didn't have the stops in, so maybe they were the ones who came through on the copper side. They're the European version of the Goldman Sachs when it comes to fooling around with markets. But that's fine. That's here nor there. They gave me the opportunity too. I didn't take it on the upside, but maybe I'll take it on the downside down here. Okay, because you know, what kind of continuation is going to come after this? I'm not saying that it can't, but this is a pretty good sign that this was the end of the run for at least now, at least a pause. Livestock, run here. Okay. Same thing. There is a line here plus the top of the cloud, so there may be a pause in your meats, but your hogs were pretty well oversold. And I'm beginning to see more marketing with bacon and stuff. Precious metals, just, you know, shoulder, head, shoulder, roll over. It just does look like they're all going to head back to, you know, the previous lows. You know, the best you could say here is at 15 and change. You know, so another 10% more here before maybe a pause, but I just think it's going to be a hard washout. Okay, so that's your spot commodities, and time for another video.